Ever wondered what self-assessment tax in the UK is? Well, let's delve into it. Self-assessment tax is a system employed by the HM Revenue and Customs, or HMRC for short, to collect income tax. Now usually tax is automatically nabbed from your wages, pensions and savings, but hold on, what about folks and businesses with other income sources? They're required to report this in a tax return. So, in a nutshell, if you have an income outside of the regular wage system, chances are you'll need to know about self-assessment tax. Now you might be thinking, how does self-assessment tax work? Well, it's not as complicated as it might seem at first glance. Let's delve into the process. The self-assessment tax process is a system that allows taxpayers to calculate and pay their tax liabilities themselves. It's like doing your homework. You need to gather all the relevant information, do your calculations, and then submit your work. First off, you'll need to keep records. This includes bank statements, receipts, bills, and any other financial documents that show your income and expenses during the tax year. These records are crucial as they form the basis of your self-assessment tax return. They also serve as evidence in case the tax authorities want to review your return. Then comes the actual filling out of the tax return. This is where honesty and accuracy are paramount. The tax return is a legal document, and providing false information can lead to penalties. So make sure you report all your income, from your salary to other earnings like dividends, interest, and rental income. Also, don't forget to claim all allowable expenses and reliefs. Once you've filled out your tax return, you can submit it to the tax authorities. You can do this online, which is quicker and often simpler, or you can do it by mail. The choice is yours. However, keep in mind that submitting online gives you a longer deadline, so it might be a good option if you're cutting it close. Speaking of deadlines, they're incredibly important. The tax year in the UK runs from the 6th of April one year to the 5th of April the next. You have until the 31st of January following the end of the tax year to submit your return and pay any tax you owe. So, if the tax year ended on the 5th of April 2024, you have until the 31st of January 2025 to submit your return and make your payment. Remember, don't miss the deadlines because late submissions can lead to penalties, and nobody wants to start the new year with a tax fine. So keep your records, fill out your return honestly and accurately, and submit it on time. That's how self-assessment tax works. You might be wondering, who needs to do a self-assessment tax return? Well, it's not just for those with a penchant for paperwork, but a wide range of individuals and groups. First up, we have the self-employed folks. If you're your own boss, you'll need to fill out a self-assessment tax return. This also applies to business partners sharing the reins of a company. Next, we have people with an annual income over £100,000. If you're lucky enough to be in this bracket, you'll need to do a self-assessment. Then we have those who make income from savings, investments, or property. If you're raking in the pounds from these sources, you're on the list too. And let's not forget those who receive foreign income. If you're getting paid from overseas, you'll need to submit a self-assessment tax return as well. So remember, if you fall into any of these categories, you'll need to submit a self-assessment tax return. So, let's quickly recap what we've learned about self-assessment tax. It's a system used in the UK where individuals are responsible for calculating and paying their own tax liabilities. This system is primarily designed for the self-employed, freelancers, and those with additional income outside of their regular employment. We've discussed how it works, and as you'll remember, it's a two-step process. Firstly, keeping accurate records of income and expenses throughout the tax year. Secondly, using these records to complete a tax return form, which can be done online or by post. The key deadlines here are the 31st of January for online submissions and the 31st of October for paper submissions. We've also covered who needs to complete a self-assessment tax return. Essentially, if you're self-employed, a company director, have an income from property, or earn over £100,000, you will likely need to complete a self-assessment. The importance of self-assessment tax cannot be overstated. It's vital for maintaining accurate records, making timely submissions, and reporting honestly. These practices not only help to avoid potential penalties, but they also ensure that the government receives the correct amount of tax revenue. Understanding self-assessment tax is not just about knowing your responsibilities, but also about being a responsible citizen, so make sure you file your returns on time and pay your due tax.